Let's break down Pi Network. We're going to explore what makes it tick, who's behind it, and what its grand vision is for the future of digital currency. Pi Network has certainly captured the attention of many, and for good reason. It presents a novel approach to cryptocurrency mining and accessibility. It's a unique project in the crypto world. It stands out because it attempts to solve some of the key challenges that have plagued other cryptocurrencies, such as accessibility and environmental impact. It aims to be a cryptocurrency for the masses, not just for tech experts or those with access to expensive mining equipment. Launched in 2019, Pi Network emerged onto the scene with a clear mission. It was a time when cryptocurrencies were gaining traction, but still remained largely inaccessible to the average person. Its goal was to make cryptocurrency accessible to everyone, regardless of their technical expertise or financial resources. This vision of inclusivity is at the heart of Pi Network's design and philosophy. It achieves this by letting you mine coins directly from your smartphone, eliminating the need for expensive and power-hungry hardware. This mobile-first approach democratizes the mining process, making it available to anyone with a smartphone. You simply download the app from your app store, whether you're on iOS or Android. The app serves as your portal to the Pi Network. Then you tap a button daily. It's a simple, low-commitment action that keeps your mining active. And with each tap, you start accumulating Pi coins in your in-app wallet. Over time, these coins can potentially become valuable depending on the future success and adoption of the network. The project uses the energy-efficient Stellar Consensus Protocol, a system designed to validate transactions in a sustainable manner. This is a key differentiator from many other cryptocurrencies that rely on more energy-intensive methods. This means Pi Network doesn't rely on traditional mining farms that consume vast amounts of electricity. It's a greener, more environmentally friendly approach to cryptocurrency. Pi's founders, a team of Stanford grads, envisioned a peer-to-peer economy powered by its own currency. They saw the potential for a decentralized digital currency to empower individuals and create new economic opportunities. Currently, Pi is in an enclosed mainnet phase, a period of testing and refinement before the network fully opens up. This phase allows developers to build applications and utilities within the Pi ecosystem. During this phase, coins can't be traded on major exchanges yet, but the community is massive and actively engaged in shaping the future of the network. This dedicated community is one of Pi Network's greatest strengths. New users, called pioneers, join the network by registering through the mobile app and tapping the app daily to mine Pi coins. This simple daily interaction is the foundation of the Pi Network's mining process. You can also boost your mining rate by inviting others to join the network, building your security circle, and increasing your earning potential. This referral system has been instrumental in fueling Pi Network's rapid growth and expanding its user base across the globe. The big milestone everyone's eagerly waiting for is the Open Mainnet launch, the point at which Pi Network will fully transition to a decentralized and open ecosystem. This is the moment when Pi could potentially be listed on cryptocurrency exchanges and traded freely, allowing users to buy, sell, and exchange their Pi coins. Until then, Pi coins are locked within the enclosed mainnet ecosystem, primarily used for in-app transactions and supporting the development of the Pi Network. And Pi coin holders are betting that their patience and belief in the project will ultimately pay off, as they await the open mainnet and the potential for Pi to become a widely adopted digital currency. Now, let's delve into the news that's currently sending ripples of concern throughout the Pi community. We're seeing significant developments that warrant a closer examination, and it's crucial to understand the context and potential implications of these events. The digital currency landscape is ever evolving, and Pi Network is no exception to the market's fluctuations and challenges. As of July 13, 2025, a date that will likely be remembered in the Pi Network's history, we've observed a concerning trend in the market. This particular day marked a turning point, highlighting the vulnerabilities and speculative nature of certain digital assets within the broader cryptocurrency ecosystem. PiCoin IOUs, traded on select exchanges, have plummeted to an all-time low. This sharp decline raises serious questions about the perceived value and stability of these instruments, and it's essential to differentiate them from the official Pi coins that are yet to be fully launched and accessible. It's critically important to remember that these IOUs are not official Pi coins. They represent a derivative, a speculative bet on the future value of Pi, and not the actual currency itself. They are just speculative IOUs, essentially promissory notes reflecting a willingness to buy or sell Pi at a future date. based on anticipated market conditions. These are promises for future delivery, contingent on the official launch and distribution of Pi coins. The value of these IOUs is therefore highly susceptible to market sentiment and speculation. The price crash has shattered the sense of security many holders felt, exposing the risks associated with investing in unregulated and speculative crypto assets. The rapid decline has left many questioning their investment strategies and the overall viability of the Pi network project. This has resulted in causing widespread panic as investors rush to mitigate their losses and exit their positions, further exacerbating the downward spiral. Years of daily mining, the consistent effort put in by countless individuals, now feel at risk of being worthless, casting a shadow of doubt over the entire Pi network endeavor. The perceived value of their accumulated Pi hangs in the balance. Social media is flooded with screenshots of plummeting prices, creating a feedback loop of negativity and reinforcing the sense of despair among Pi network participants. This is coupled with anxious discussions filled with speculation, uncertainty, and a desperate search for answers and reassurance within the community. The mood has shifted dramatically from hope and optimism to anxiety and apprehension, reflecting the volatile nature of the cryptocurrency market and the inherent risks involved. Consequently, many are questioning if their efforts were in vain, wondering whether the time and resources invested in mining Pi will ever yield tangible returns. This downturn is a major stress test, pushing the Pi network's resilience to its limits and challenging the core principles upon which it was founded. It's a critical moment for the Pi community and its developers, demanding transparency, effective communication, and a clear roadmap for navigating these turbulent times. Fear is spreading like wildfire, fueled by uncertainty and the lack of concrete information regarding the future of the Pi network. This is leading more holders to consider selling their IOUs, further driving down the price and creating a self-fulfilling prophecy of market decline. The dream of a people-powered cryptocurrency, a vision of financial inclusion and decentralized wealth, is facing its toughest reality check yet, forcing a reassessment of its potential and the challenges that lie ahead. The digital asset landscape can be a turbulent one, filled with unexpected twists and turns. Right now, a lot of people are watching the value of their Pi IOUs and wondering what to do. Why are so many rushing to sell, seemingly all at once? What's driving this wave of exits from the Pi network ecosystem? It's mostly fear and uncertainty that's fueling this trend. The crypto market is known for its volatility, and when uncertainty creeps in, it can trigger a domino effect. The endless wait for open mainnet is a significant factor. The anticipation has been building for a long time, and the lack of a concrete launch date is starting to wear on people. This extended period of waiting has worn down patience considerably. The initial excitement and optimism have gradually been replaced by frustration and a sense of unease. With no clear launch date in sight, it's difficult for investors to plan and assess the potential of their investment. The ambiguity surrounding the timeline creates a sense of limbo, and with falling prices across the broader cryptocurrency market, the situation becomes even more precarious. Declining values can amplify existing anxieties and trigger impulsive decisions. As a result, faith in the project's long-term viability is fading for some. The combination of delays and market downturns can erode confidence and lead to a reassessment of investment strategies. This also leads to doubts about the project's legitimacy. The longer the wait, the more questions arise about the team's ability to deliver on their promises. And those doubts about the project's ability to deliver on its promises are growing stronger with each passing day. The lack of transparency and communication can exacerbate these concerns. In a bearish crypto market where prices are generally declining, investors tend to become more risk-averse. Consequently, people often flee risky assets like Pi IOUs, seeking safer havens for their capital. They look for safer bets, investments that offer more stability and less volatility during uncertain times. Of course, some early users who acquired Pi IOUs at very low prices are simply locking in profits. On the other hand, others are selling to cut their losses, hoping to minimize further financial damage. Watching your asset's value drop daily, especially in a volatile market, is an emotionally taxing experience. Faced with this constant decline, many decide it's better to exit their position now before things potentially get even worse. They'd rather salvage some of their investment than risk losing everything if the project ultimately fails to deliver. Therefore, the sell-off we're witnessing is a complex mix of fear, skepticism, and a desire to protect one's capital. It's driven by the urge to salvage what's left of their investment before further losses occur. For many, selling at this point feels like the safer, more prudent decision than continuing to hold on to hope that the project will eventually come to fruition. What's driving the price down? First, Pi has little real-world utility right now. You can't spend it widely or trade it officially. Most value is speculative. The slow, glitchy KYC process blocks many from moving coins to mainnet, fueling frustration. Communication from the core team is often vague, leaving users in the dark. Lack of transparency breeds rumors and fear, hurting confidence. Thin trading volumes on unofficial IOU markets make prices easy to manipulate. A few big sellers can trigger panic, causing a cascade of sell-offs. The market's fragility means even small shocks have big effects. The price drop reflects both real concerns and market manipulation. Until utility and trust improve, volatility will remain high. Pi Network faces serious risks that could make or break it. The biggest is failing to launch open mainnet soon. Every delay erodes trust. Regulatory scrutiny is rising, especially around KYC and compliance. Any misstep with regulators could block exchange listings and cripple the project. Competition is fierce. Other mobile mining projects are catching up. Pi's first-mover advantage fades the longer users wait. Community frustration is growing, risking fragmentation and loss of momentum. If the team can't restore confidence, the network effect could reverse. The project's future hinges on overcoming these hurdles quickly. The Pi community is split between faith and fear. Long-term believers see Pi as a movement, trusting the team and the vision. They urge patience, arguing that real innovation takes time. For them, the current price is just noise. They're in it for the long haul. On the other side, fear is spreading fast. Holders worry about endless delays, falling prices, and wasted effort. Social media amplifies anxiety, turning doubts into panic. Skeptics demand transparency, deadlines, and proof of progress. The clash between hope and fear is playing out in real time online. The project's fate may depend on which side wins over the majority. For now, the community stands divided, waiting to see what happens next. Thinking of getting involved with Pi? Proceed with extreme caution. Know the difference. Mined Pi in the app isn't tradable, while IOUs on exchanges are pure speculation. Buying IOUs is risky, they're not real Pi coins. Do deep research, read the white paper, check the roadmap, and seek independent analysis. Never invest more than you can afford to lose. Treat it like a lottery ticket, not a sure thing. The risk of total loss is real, especially with the current uncertainty. Consider the non-financial costs, your time, attention, and personal data. KYC means sharing sensitive info. Be sure you're comfortable with that. Weigh the effort and privacy trade-offs before committing. In crypto, caution and skepticism are your best friends. Despite the gloom, Pi Network could still recover. The biggest catalyst would be a successful open mainnet launch. Real trading, real value. A smooth launch could restore confidence and attract new interest. Building useful apps and marketplaces within the current ecosystem would show real utility. If people can spend Pi, demand and value will follow. Better communication and transparency from the team would help rebuild trust. Regular, honest updates and a clear roadmap are essential. Strategic partnerships with major companies could provide instant credibility and utility. Any of these moves could reverse negative sentiment and spark a turnaround. The project's future depends on bold action and real progress. Pi Network stands at a crossroads. The all-time low IOU price reflects deep community anxiety and impatience. Years of effort now feel at risk, dividing the community between hope and fear. The core team must act fast. Delivering open mainnet and real utility is critical. Regulatory, technical, and competitive risks are mounting. For newcomers, extreme caution is advised. This is high-risk territory. Still, a path to recovery exists if the team can deliver on promises. Pi's story will be a case study in the power and peril of community-driven crypto. Whether it becomes a success or a cautionary tale depends on what happens next. For now, the world is watching as Pi faces its defining moment.